Alphabet just reported and the share price actually went down as opposed to what I think it should have gone up a little bit. And so I'm going to make a case in this video that just like how Meta surged with their recent earnings this quarter, I think Alphabet could potentially surge with their earnings announcement next quarter. Now, of course, I could be wrong, but let's make a case for it because it's fun to speculate. So as you guys smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. Now, a lot of you guys do believe that Alphabet is a better franchise than Meta, and I would agree with you guys on that point. And so my question is, why is it that Alphabet is trading for a larger discount to its intrinsic value than Meta is right now? And it just doesn't make sense. And I feel like if in this environment, you're going to see Meta surge the way that it has with its latest earnings, I think investors are just waiting for some challenges for Alphabet to get over, and then the share price could potentially surge as well. And so let's dive into some of those challenges and just sort of discuss what it's going to take for Alphabet to surge. And I am confident that I do believe that that could happen this year. So let's dive into it. So you can see that after they announced earnings, the share price actually declined almost 3.5%, which, I mean, on the face of it doesn't necessarily look like it's that bad, but also just note that the share price has been up quite a bit this year. And this is what I mean by that. You can see the share price actually was in the mid 80s and it surged up to the, over $100 per share. So it has been up 17%. However, I think a lot of us are valuing Alphabet somewhere in that 125 to 150 range. And so, if it goes up to, even into the midpoint, the 130s, etc. there, that's a almost 30% surge that we could see at certain point this year. And so, I think we can all agree that this right now could potentially be an undervalued security. And it's something that, it could prove fruitful for us to put into our portfolios. Now, this is never advice, of course, but I just love to share my research with you guys. And, of course, like I always say, I can always be wrong. Things can always turn the other way. And I've been wrong many times in the past. And so let's see how the quarter played out. So you can see the main story here is that, of course, Google search, I think the bigger item here is that Google search actually maintained its growth in the fourth quarter. So, yes, it went down, but it didn't go down by a significant amount. And so, when you read the news reports and they're saying that, Google search is challenged right now, I would push back and say, 42.6 compared to 43.3. Listen, man, parity is not a bad place to be in this economic environment. I would say if you get parity in Q1 as well, in other words, if you get no growth, it's probably another good story considering that, you saw with Meta that pricing is way down, right? And so, with ads, you can see that they are in a challenged environment. However, once again, I read this as a good news story because we know how much down pricing is. And so, if it's only down 7%, yes, it continues the trend of last quarter where it's going down. This is a good news story for me, especially considering all the investments that they're making into YouTube. And so here's what they said. In YouTube and network, the year-over-year revenue declines were due to a broadening of pullbacks in advertiser spend in the fourth quarter. Does this look like a huge pullback in spend by the overall advertising market? Yes, obviously it's going backwards, but the point that I'm making is that it hasn't gone backwards significantly. If this was down 20 or 30%, I'd be a little bit more concerned. I'd be asking more questions, but I think they would answer it the same way that they answered it in this call. And so once again, this is a good news story. Both of them are a good news story for me. Now, the other thing is, I think cloud is a much better story than what I expected. You guys would know that I was forecasting cloud to grow at a max of 25% this year. I think I even had it forecasted at 20%. So the fact that they were up 32% shows how little you can rely on my valuations because I'm always super conservative. This is why I always tell you guys to build your own models because I am just inherently conservative when it comes to valuing these companies. And so I'll give you a valuation. I'll be like, this company's worth $140 per share. And really, the average person might think it's worth $150 per share because they're not psychotic like I am. And so, you can see that they've done exceptional with cloud. And the strategy was simple. I'm not going to go into the strategy for cloud, but ultimately they're creating these value-added services in their cloud space, which is allowing them to grow. The other thing is they're number 3 in the space. So of course they have a lower base to grow from and they're growing. And so this is great for us. If you're interested in the cloud business, I'm interested in the cloud business for sure. I'm also interested in connected TV. I think YouTube does a really good job in leading that space. And then, of course, I'm also interested in the future profitability of search as more and more advertisers find new and unique ways to search on the Google platform, and they're still working with them to provide them with better options. And so I just think that these guys have a lot of franchises that are very future focused, and they're going to continue to grow out. And, you know, you'll hear from them about the risks that they're facing right now. You know, a lot of news articles have come out about how ChatGPT is going to, you know, destroy Google, etc., or destroy the franchise. Well, they talk about how that's not actually going to happen. I, you know, have said from the beginning that I don't believe that ChatGPT is the boogeyman that a lot of people are saying that it is for Google search. And you'll see how they discuss how they're addressing that risk and how they're going to improve their search with AI. But the other thing that they're going to show you is that they've been actually integrating AI into their search function for 4 years now, which is what I was suspecting was already happening based on the search results that I was getting. But now they've come out and told us. Now, they probably have told us previously, but I don't see everything. I don't read everything. So I just assumed that I just missed it. Now, the first area that I wanted to go into was that whole AI discussion. So notice that this is what they said about their advertising business as it relates to AI. It's important to recognize that our advertising business has obviously benefited over the past decade from the transition to mobile. And then it also benefited from the pandemic. Going forward, they are not fighting last year's war, is essentially what they're trying to tell you. That they're not going to sort of like hang their hat on what has made them successful previously. So here's what they're telling you that they're going to be doing. They're focused on growing revenues on top of this higher base through AI-driven innovation. So that tells you that these guys are also future focused. There's nothing that ChatGPT has that Alphabet cannot catch up to. And, you know, somebody might have the best AI platform, but it doesn't have to be the best in the world. It just has to be good enough to allow the consumer to access or address the solution that they're looking for. And if you already have such a huge base, you know, the amount of base that, you know, Google's things on a day-to-day basis, that if you just have something that's good enough, then you're going to win, or you're going to continue to maintain your dominance. And I think that's what's going to happen. You know, Bing could get more users. Ultimately, there could be some erosion of market share, but remember, the market share is like 99%. If Alphabet continues to maintain even 95% of the market share, they're fine. You guys let me know what you think. Will Bing become a greater search engine, or take some market share away from Alphabet? I want to know what you guys think. And so already, breakthroughs are being seen in everything from natural language understanding to generative AI are fueling our abilities to deliver results that drive meaningful performance for advertisers and are useful to users. And so they're essentially taking the same approach that Meta told us that they're taking. So here's the other thing that I want to point out, that everybody in this space is focusing on AI. And, you know, the thing that I tell you guys all the time, and I might be wrong here, but the way I see AI rolling out is that it's going to be pervasive. It's going to be all over the place. It's going to be offered by a lot of companies, and you're not even going to notice in certain things that it's embedded in. Like, when was the last time any of you guys opened up your Instagram app and you said that, hey, you know what, it was an AI algorithm that recommended this new video to me based on my previous swiping? I never inherently thought about that, but it is very true. They're doing mass individual targeting of specific videos for specific people, and that's very powerful, especially in the advertising age. Now, a lot of people don't focus on revenue by geography. This is one of those ones that has been skipped. You know, I haven't really seen it discussed, but the reason why I want to point out the revenues by geography for the quarter is because notice that revenues actually were only up slightly over 2021 for the quarter, but notice that if you put it on a constant currency basis, revenue was actually up quite a bit. And so once again, you continue to see these headwinds year over year as a result of the US currency just being stronger. So just keep that in mind, because the US currency isn't going to continue to be stronger and stronger every year, at least in my opinion, into perpetuity. And so, you know, you're going to see a reversal of this impact, and thus you're going to see it get translated into the financial statements at a later date. And so just keep that in mind as you look at the results, especially of these companies that operate, you know, in multiple geographic areas using multiple currencies. So in other words, the results aren't as bad as a lot of people have thought that they were. Now, the other thing is, when their CEO spoke on their conference call, the first thing he addressed was that ChatGPT risk. So let's first take a look at exactly what he said as it relates to artificial intelligence and it being utilized at Alphabet. So you can see here, the first thing he said that was, in the coming weeks and months, we will make their language models available starting with Lambda so that people can engage directly with them. Now, I don't know a lot about Lambda. I will do some research on it afterwards, but the fact that this is the first thing that they addressed was essentially their response to ChatGPT and all the news outlets that were saying that, Google is no longer going to be the search engine of choice. They're basically just pushing back and saying, yeah, good luck and try beating us. And the second thing they said was that language models like BERT and MUM have improved searches for 4 years now, enabling significant ranking improvements and multimodal search like Google Nets. Now, here's the thing. They've been utilized or improved searches for 4 years now. So here's where I said I had a feeling that they were already using AI. Now, I might be wrong. I'm not an expert in this space, right? But, I just felt that search was getting a lot better in the past few years. And the other thing was I was being fed news stories and stuff on my Google search page that when you open it up with your mobile that they weren't offering before. And so I just would open up the Google app and I'd have all these interesting articles, and I knew it was stuff that I searched across their universe of apps, because there would be like YouTube creators that would get pushed to me on my Google app itself, like the search app. And so it's very clear that they're using some sort of mass targeting searching strategy, because it would also send to me stuff that I may have watched like 20 years ago, like old like WrestleMania clips or something that somebody posted on YouTube, and it comes to me, or articles about certain things, like of course Alibaba, that gets fed to me a lot. And so it's very clear that they're doing this sort of like mass targeting. And of course, how do they make money on it? Well, if I go to YouTube, they serve me ads, and if I click on any sort of like news article, well, that they serve me an ad through their Google members properties as well. And so, or it could be third party, and then they also have a ad serving agent there as well. And so you can see how they're trying to get me to use their network of properties more and more, and it's working. And that's how I assumed that they were integrating AI for many years now, and they now have come out and told us that they are. Now, the second thing that they talked about was that, they're now looking to become a platform as it relates to AI. And they're going to do that by providing new tools and APIs for developers, creators, and partners. And essentially, they want these people to build their own applications on the back of their AI language multimodals and other AI models. And so that's pretty cool. This reminds me, and you guys let me know if I'm misinterpreting this, but this reminds me of exactly the same strategy they used to grow out Google Cloud as well. And so you guys let me know if I got that wrong. Now let's go to Google Cloud itself. So they're saying that Google Cloud is making our technological leadership in AI available to customers via our cloud AI platform, including infrastructure and tools for developers and data scientists like Vertex AI. So once again, this is your response to the threat from Microsoft, because you guys know I put out a video a couple of weeks ago that said that Microsoft is integrating their AI and their ChatGPT functionalities into the whole business, whether it be Bing, whether it be Azure, everything. Well, here's Alphabet saying, good luck. We are the leaders. In other words, technological leadership right here. We are the leaders. We're going to roll this out into our cloud platform. So good luck competing with us. So in other words, Alphabet is not behind the curve as much as people think they are here. Now, the other thing is, they said that we also offer specific AI solutions for sectors like manufacturing, life sciences, and retail. Remember that retail part, and we will continue to roll out more. And so I think here's where the money is, because ultimately, when it comes to cloud computing technologies, the real money is finding a way to get people who wouldn't be using cloud businesses, like, non-internet type companies, to use cloud services. So for example, there's hundreds of retailers out there who would love sort of like an inventory management software that is done through AI. It's connected and it goes right to head office, buying and selling, so that the companies can make sure that they're always stocked with the right stuff and in real time identify what's not moving and reduce the buying of that. And so it just makes inventory management, which is the hardest thing for a retailer, much easier to do. And Google is actually making huge investments into this space. And so you guys may have missed this, but this was actually on the Wall Street Journal just a couple of weeks ago, where Google Cloud introduces shelf inventory AI tool for retailers. And so they have an image database of more than 1 billion products, which allows the tool to work through the already cameras that the retailers have and then identify what's on the shelf, what's not on the shelf, and then of course you can time track it to determine what's was on the shelf before and what's on after, and determine what's being sold. And what this could potentially also be, I see it in the future, is actually not just helping the buying teams, but also helping the accounting teams as well, right? Because it could just be another way to, or another analytic to determine if you're selling the products at the rate at which your cash register is saying. And so what do I mean by that? Well, you can use this analytic to determine exactly how much is being stolen off the floor shelves versus how much is being stolen from the back end. And so like the storage area. And so you can determine where the losses are coming from using this type of tool. So, this stuff is not, it's still in its infancy, of course. It's still being developed and rolled out, and I'm sure it's going to still be expensive. But the point that I'm making is that they're making ways into this. And so this is what I mean about like AI just being pervasive. A lot of you guys, you'll walk into a Walmart, you wouldn't even know that they're using AI to track their inventory. However, it's happening. And so this is what I mean. And this is going to be pervasive throughout all sorts of businesses. But I also think that's where the money is. If you can get people who are in non-internet businesses into the AI space by selling them AI-based products or cloud-based products and integrating it all, then you win. And I think Alphabet has the right strategy here. It's no longer just an ads business, although the majority of the revenues are still ad, and the ad revenues are supporting the growth of other areas. Now, a lot of you guys are familiar with DeepMind, and so they spoke about DeepMind as well. So they said that, one example of DeepMind being used is with its protein database of all 200 million proteins known to science, and they're now being used by 1 million biologists across the world. And over the past few years, DeepMind has been increasingly working across groups within Google and other bets to reflect that progress. So another reason why I reiterate the fact that I don't think that there will be one winner in cloud or AI. I think there'll be many solutions created for many different problems, like this very specific problem here, right? Just getting access to the whole database of 200 million proteins that helps biologists research. And so here's what I mean about there's a lot of problems to solve. I just don't think that there's enough companies solving them. So I think Microsoft wins in this environment. I think Alphabet wins in this environment. I think Amazon with their cloud products, they potentially win in this environment too. Even Alibaba, solving the same types of problems in China or internationally now as they're moving. So the point that I'm making is that it's not a zero-sum game. I think that there's a lot of problems for humanity, and there's a lot of problems coming which we don't even know that they exist yet, but these companies will be there to sort of solve them. And so here's where I align myself more with the management. And yeah, the company may be struggling today, but I think that they have a good long-term trajectory themselves. And so obviously I'm still focused on margin of safety. I want to get this relatively cheap. Cash flows matter, but at the same time, I have to sort of be aware that I'm not factoring in any of the future potential growth. In other words, the bets, like the alpha bets, part of this into my valuation. I have to just keep an open mind to that because they will exceed expectations very often. For example, where I was forecasting cloud to grow at 20%, they grew at 30% or higher than 30%. So, they will exceed and they will continue to do so. And so you have to just sort of keep that in mind as you build out your models as well. And I'm sure you guys do. I just struggle with it a little bit because I'm so conservative inherently as it relates to my investments. Because I focus on rule number one, which is don't lose any money. And, I think I'm one of the few creators that didn't actually lose money investing in 2022. But that's also because, I was in a lot of cash. And so that's also not the best thing in the world. You can be so conservative that you don't lose money, but then you also don't make money as well, right? So you kind of have to find a balance. And that's really the challenge that has always been something that I've had to face with as I've been investing into the securities markets over the past few years. Now, let's go into some of their segment results and see how they're doing. I think you guys will be very excited with the progress that they're making. So you can see with YouTube, notice that their subscription business continues to grow with YouTube Music and Premium surpassing 80 million subscribers. I had no idea that their subscriber business was so big. And so, they have invested into YouTube's NFL Sunday Ticket. I'm sure you guys saw this already. And I believe that will actually accelerate the drive for more subscriptions. And so the other thing is, I don't spend a lot of time talking about their phone business, but notice that it actually was the phone of the year by many outlets. And so I thought that was very interesting. But here's a more interesting thing. They've gained share in every market that they operate in this year. So watch out iPhone, watch out Samsung. And I actually like the Pixel as well. I was actually considering getting one. The only thing is, the reason why I got a Samsung when I upgraded my phone last time is that they just pretty much gave me the Samsung phone for free. And so I'll take a free phone over having to pay for a Pixel any day. Now, with Google Cloud, once again, they're differentiated products. This is what I was talking about earlier, where they've created like this platform, and go-to-market strategy has been the reason why they grew 32%. I think they continue to grow at very strong rates. I'm not going to forecast 30% growth rates, but I'm more comfortable with forecasting like 20% growth rates for this segment. And you guys let me know how you're forecasting it. I actually do want to know from you guys how you're forecasting this out and what rates you're using and why, because I think that I might be a little bit too pessimistic as it relates to cloud. Now, of course, the one area that a lot of people are worried about is YouTube. And it is a place that you do have to worry about, because YouTube is growing at like 20 or 30% annually. And so the fact that it's going backwards is challenging. And so let's see what they had to say about that. So they said that despite the ongoing revenue headwinds in Q4, they're confident in YouTube's long-term trajectory. I mean, so am I, really, right? And so in 2022, more people created content on YouTube than ever before. And those more creators mean more content, which means more viewers, which leads to more opportunities for advertisers. And so to support that growth, they're focused on, number one, they're going to be ramping up shorts, which everyone is doing. Meta just told you that they're going to be ramping up on Reels as well. And of course, TikTok is winning right now. So, you have to win in shorts. They actually just started monetizing shorts. I've been getting a lot of emails saying, hey, you should make shorts. We're going to pay you for them. But I'm not a shorts channel. I know a lot of you guys, some people have been emailing me saying, hey, they'll make shorts for me. This is not a shorts channel. And I'm not really focused on growth so much as I'm focused on providing good content. And so, hey, if this channel stays at 10K subscribers for the rest of its life, I don't care. It'll just be one of the best hidden secrets or undervalued channels on YouTube, and I'm totally happy with that. And so number two, they're accelerating engagement on a large screen. And number three, they're investing into their subscription offering. So accelerating engagement on a large screen, that's like your NFL Sunday ticket, or streaming TV on your TV using a Chromecast. Now I've had a Chromecast for 10 years now. It's the greatest thing in the world. I stream YouTube right onto my TV at home. And then of course, investing in their subscription offerings, you guys know what that is, right? That's the you can either subscribe to channels, or you can subscribe to even like the ability to subscribe to like movie networks on YouTube, where you get access to a database of movies. I would say that that'd be pretty cool too. And then number four, a long-term effort to make YouTube more shoppable. Now here's where I think I'm a little bit too optimistic on Alphabet. Here's where I'll say that they've really messed up. I think YouTube has been notoriously bad at monetizing. I just think they're very bad at it. And here's where Meta and TikTok have been crushing them. And so I'm glad that they're focusing on it. Let's see what they can do. When I originally talked about Alphabet a couple of years ago, they did announce a lot of stuff to monetize YouTube better, or help creators monetize better, but you still had no answer for like affiliate links. You had no answers for merch, etc. Now they have like merch. They don't really have affiliate links. Their subscriptions to their channels are still not like really profitable. Like if they're going to take 40% of it, you might as well not do it with them. You'll use like a Patreon or something. And so, they're still not there. And I think that they can grow a lot better if they focus on the creators less than focusing on what their cut is going to be for this kind of stuff, right? Just grow it out and then worry about making money on it later, which is exactly the strategy that they followed when they were originally growing out YouTube. So they should just continue to follow that strategy, but they've just been bad at it. And so, let's see what they roll out as it relates to making YouTube more shoppable. How great would it be if you click on something and it goes right to the website where the product is being sold? So in other words, you click on the YouTube video and it goes right to the website, and you can purchase it using, just like a swipe on Google or something. And so I think there's opportunity there, but they have a lot of work to do. And so let's see what they can do. Now, just focusing on connected TV a little bit. Now, I spoke about it previously, but YouTube is the leader in US streaming watch time. And of course, advertisers are leading in. It just takes time because advertisers are not used to connected TV advertisements, but this is a very fast growing market. And so just keep that in mind, guys. And so given the potential that they saw in subscriptions, they recently announced a multi-year agreement to distribute NFL Sunday Ticket. So you expect to see more of this, right? Expect to see more channels, movie networks, et cetera, et cetera. Like, I think the move for the distribution of movies, like theater movies, is here as well. So it would make a lot of sense where you originally get the movie playing in movie theaters because that's where you make the most money, but then like 2 weeks later you have it exclusively streaming on YouTube, where people actually are either subscribers or they pay for the movie to stream on its own before you send it out to the other streaming platforms, which may actually pay them less. And so, this is ultimately a strategy. I think the streaming platforms like the Amazons, like the Netflix, they like exclusivity. I don't know if that's the case for sure, but it just provides another outlet for streaming new movies as well, and a way to monetize that. And so I think this is good. I think they make money, but I think they really need to invest in the platform. Don't worry so much about making money right now. Just grow this out. Allow people to get used to watching TV on YouTube. And, even if there's a section on YouTube which is just called live TV, I don't know if it exists for you guys in America. It doesn't exist for us in Canada. But if there is a section that says, live TV, and there's just a bunch of channels, and you can click on any channel and it's just live TV, that goes a long way to making the consumer more used to streaming TV off of YouTube. So let's see if they do that. Now, I talked a lot about the results, but now let's get into the numbers and how I'm forecasting this whole thing out. So you can see this is my model that the Patreons get access to. And of course, you can see these are the actuals for 2022. But notice that for Google search and other, it grew 9.1% in 2022. I think 2023 is a little bit challenged. And so I'm growing it out at 5%. And I'm just growing it out 5% thereafter. I think this might be a little bit conservative, but the point here is that Google Search is a product that is somewhat mature. And so, even if it grows out at 5% a year compounded, I think that's pretty good and what I would expect. For 2023, I really am giving them leeway because we're entering into a tough advertising market, and a lot of stuff is still in its infancy, especially connected TV. Plus, they made they made investments like YouTube, the NFL, where they of course will have more expenditures as it relates to just sort of like delivering that content. So, this segment might not actually achieve revenue growth in 2023. I'm not sure. And so I just gave it 0, and then I brought growth back in 2024. And, I might actually change that to a 10 and then bring it down to 7.5 in 2027. So I might update that before you guys get access to the model. With network member properties, I think this still grows out at 10% for the next couple of years, and then it just sort of trims down. I really should highlight that, and so I will once before the model is sent out to you guys. Overall, you can see that advertising, it's growing at around 5% for the year because it's largely driven by search, right? It's the biggest segment. And then, it really doesn't go past that 5%, 6% in 2024, but largely at that 5%. So, very conservative as I'm growing out their biggest segment, which is ads, right? And then other, it's just slow growth, and then just a little bit of a recovery in 2024 as the economy picks back up, and then just sort of works its way back down. That's kind of the same thesis with YouTube as well. And then cloud is really the only big grower that I'm forecasting out. In fact, you know what I should be doing? I should grow YouTube out at a little bit of a faster rate, because I do believe that it does grow out at a faster rate than what I'm forecasting out. But nevertheless, I'm forecasting clouds to grow at 25%. This could easily be 30% in 2023, and then I'm bringing it down. But what I probably should do? I probably should do 25 and then bring it down to around 17 here, and then bring it down to 15 there. So I might do that thereafter. So that'll bring up my valuation a little bit. And, ultimately my valuation sits at around, 130, 140, somewhere around there. If you want access to the valuation, you can get access to it in the Patreon. But I have a question for you guys. Now that Google and Meta have reported, I want to know from you guys, which company do you think is cheaper? Is it Alphabet, like Google, or is it Meta? Which company do you guys think is the better investment to invest in for the remainder of this year? And so I want to know what you guys think. Now, if you want to know what I think, You can get access to all of those models, including Meta and Alphabet, which have been updated for the Q4 results, and every other company that I follow, including Alibaba, Starbucks, Nike, etc. All of them at that $5 a month tier. And we have a call this Saturday where we actually do our monthly call. And if you want to join us at that upper tier, you can join us at this upper tier where we have a monthly call. You can ask me questions live. It's a really great experience for everyone involved. And so let me know what you guys think, whether Alphabet or Meta, which one's cheaper, which one's a better opportunity. Now, if you've missed that video on Meta, no problem. I actually just released it yesterday and you can get access to it right here.